Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 15th of December. So we've seen a week of explosive moves. We've seen some really big moves on the currencies and the indices this week that have hit some very key targets, but we are at some very important zones right now. So we'll jump straight into the analysis and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that the support we had at the 20 moving average and that zone at around that sort of 65.50 to 65.70 zone has well and truly held and obviously blasted through and taken off to the next point of resistance, which is around that 66.80. It did get as high as 67.24 or 67, nearly 30 actually, but you can see that it's already starting to pull back a little bit in this at the end of this session. You can see really that at this point here, it's the mid zone of this channel. You can see that we've got a lot of tops right through here, so you can see all of these wicks. I'll pop a line there to make it a little bit clearer. You can see here that we've got a lot of support through there, all these wicks here being resistance. Okay, so no real surprise that we see it's a 20 zone, as we know, so those are important resistance and support zones anyway, but it's sold off quite a bit. We're down nearly 40 points off that exaggerated move, but you're going to see that in a few of the things that we're going to look at today. Down at probably the level we would have expected it to hit. The take profit was definitely here at around that sort of 66.80 to 70 zone anyway, right? Or 67-cent zone. That's where you really wanted to be taking profit on a move from here, because that's the easiest path of resistance. You can see that we've got a previous top that's already been there. But that said, it did overextend. They quite often do when they launch off. Guess what it effectively did from this level here. What it does now is going to be really important, because we wouldn't want to be getting in on it again until it actually is above and trading above 67 cents, probably 67.30 to 40. A test of that from above would be ideal. That would give us the momentum shift that we need to continue on this trend. But I wouldn't be keen on just jumping in on the long, because we've already seen the move. We want to see a bit of a pullback now to give us a bit of consolidation. A pullback down to the 66.20 also makes sense. If it comes back all the way down here and around bottoms, then we can look at attempts again at that 67.20, which is 100 pips away again. So not bad trading on the Aussie. Hopefully you're able to catch that nice big move, because it happened off a very strong level of support. All right, over to the CAD, and it's effectively done what we needed to do as well. It rallied last week, found resistance at the 20 moving average and this resistance zone right through there. And then, of course, down it came after a series of indecision candles at that resistance. It basically went from 136 all the way down to 134, nearly flat. You can see here down the bottom. This is a very strong support zone as well. That's why I said at the start, a lot of these very important zones are getting hit now, and they were big moves to get there as well. So I would expect to see some consolidation at this level. I wouldn't imagine that it would continue to sell off without some sort of a response from this support here. We've got secondary support at 133.20. I mean, that is the next point of call for it. But I would have thought we'd probably see a little bit of support before it actually does that. I'm not convinced it's actually finished going short. It's just that I wouldn't probably expect that all in the one big move. But hopefully you're able to catch that. I thought it was a very obvious trade here at the reversal of this point when we saw resistance and a 20 moving average. Once it did start to sell off, it was a pretty easy trade to get into. And yeah, the 15-minute, the 1 hours, they gave us all the signs that we needed. The lower high, lower lows that we talk about all the time played really well there. So hopefully you're able to catch hold of that. But it is at a very important support zone at the moment. The next real support is down here at 133, sort of 30 and 20. So that's the next point to look after. But let's see if we can get some consolidation here. Maybe a bit of a pullback up to the 135 would make sense. But I would probably look for a rollover at that point and maybe continued selling. Until it's trading above that level, I wouldn't consider going any longer than that. So maybe a little short reversal back up to here if we get a series of higher highs and higher lows, and then look for that change of trend again. Over to the US dollar yen, and again, this did exactly what we needed to do. It was a week of testing the levels that we were hoping they would. So as you can see, after the amazing sell-off that happened last week, It basically rallied all the way up to where we would want it to, the role reversal zone at 146.50. And from that point on, it just continually sold down again. So this is what I always talk about when I say that we wanted to test the break area from below here. It's done that. It's came up here, tested the level, and then rolled over. And the obvious target is the previous move. And that was here at 140, 180. Okay, so when the market tests that level on the basically after a pullback, it's usually the easy trade to get back down to where it's already been. So the fact that it's finding support potentially at this level, there's still a little bit to go, but there is a little bit of support here that could form because of the. I'll pop a horizontal line right through there. Okay, this area here, I would expect to find some sort of support. It's going to probably bounce off here, but the way that it's been falling, it's not going to surprise us in any way, shape, or form to find it back at 137. This is probably the main support level now, where I would be looking to find real support. It's still a little bit to go, of course, but it's done all the right things for us so far. It's pulled back to the level we needed it to do, and then came back and basically taken out the level that we would have been short into anyways. Hopefully you're able to get hold of that trade, because again, that was a relatively easy one to get into. I really like that one. I know some people did because I've got the email, so very good trading there. Dollar index, very similar story to the yen. Basically went up to the resistance, very strong, heavy resistance here at 104. And a 20 moving average. It basically rolled over and then down it came, plummeted down, obviously, in two very, very big candles. But you can see that the writing was on the wall. Like I said last week, we're obviously in a very strong downtrend, and there was no reason to think that that was going to change anytime soon, because we simply haven't had the reversal pattern. But what it did do is come up and test that level from below, which is a very important support break. And then continued on to the short, which is basically technical analysis 101. The euro is obviously the one we want to trade there, and it did the exact same thing, tested the 50 moving average, big bounce up to the 110. Obviously a very, very big move. 110 is very strong for it. Look, the 110.50 area is a very, very heavy resistance zone, very heavily guarded zone here. It's strong here also, though. You can see here that even these tops right through here provided a lot of wicks and a lot of problems for us to go higher than the 110. But realistically, 110.50 is where the heavy resistance is. Big bounce off. You could have got into that. The way to get into a trade like that, obviously, is to go to the smaller time frames. Once you've done that, you can see, let me just auto correct that. Once you get the series of higher highs and higher lows, you're off. Okay, that's basically what you're looking for there. If you're looking for scalping opportunities and going even smaller, same deal happens. All the things we talk about all the time. Wait for the pullback to the 20 moving average, and then you're in. 20 moving average, then you're in. Okay, so that's how you trade those big moves. Even though they look very, very big and difficult on a daily, they're not that hard to get into when you look at all the things that we normally look at. Okay, so pretty good trading on the euro. Hopefully you're able to catch that, because that was a very, very strong support zone, and all the indecision was leading the way to tell us that there's a really good chance it was going to find support at that point. So hopefully you were able to catch that move. Like I said, right here, right now, I'd be waiting for it to really either consolidate and if we do get a break above the 110, look for maybe a mini pullback to a 20 moving average on a 1 hour or something like that to potentially get it to the resistance. But be aware, there is very strong resistance at that level. And of course, if it rolls over and starts to form lower high and lower lows on the smaller time frame, look for maybe a pullback back to around that 108, maybe 60 to 80 area, which we know is our previous support. And then we'll go to the S&P 500. Look, it's been no different. It's had an extraordinarily big week. You can see it broke through that resistance right through there and had a big move all the way up to 4,700. We still are at the tail end of the US session at the moment, so the candle hasn't closed. It's trying to sell off. It did hit the, it went as high as 47.38 there. So really, it's been a pretty reasonable pullback already, 30 points of a pullback already, and trying to do a little bit more. You would think that it would probably find a little bit of resistance at this point here, and now look for a bit of a pullback. The ideal pullback will be around to that 4,600 though. I wouldn't be thinking it's going to sell off and go crazy. What we're looking for is some consolidation at a decent pullback zone, so we can actually get involved in potential longs up until Christmas. We know seasonally We do go strong towards the end of December as a rule. Most of the time, it's gone a little bit earlier this time. It has gone in the middle of December, which is a little bit earlier than it normally does. So whether that's a catalyst for a continued big move all the way to the end of the year, or whether it's just gone a little bit early and it's going to pull back and consolidate now, only time will tell us that, but we'll look for pullbacks at the moment down to around that 4,600. That would be ideal. We'll watch the next candles with a great deal of interest, because I'm not really interested in going long now until we get a bit of a reversal and a bit of a pullback to a key level, so then we can actually join in the trend from a decent level. So I hope you've had a great week's trading, team. I think the moves have been very, very good. All the ones that we talked about last week basically played out. So hopefully you're able to get involved in some, if not all. But just be careful now that we are at very, very important zones that have been hit. So a correction could happen if we're not vigilant. If you have taken the longs or the shorts in the right direction, just beware that we are at very, very important zones. So you don't want to give too much back if it does reverse. Thanks very much and have a great weekend. I'll see you next week.